everybody. Welcome to the Stock Market Morning Prep video for Monday, May 14th. Well, we have a new week, but we have a shortened week. So, a couple of interesting developments that should take place. First of all, we have Janet Yellen speaking Tuesday, and then really officially on Wednesday in New York. So, that's going to, I think, she's so dovish that I think that maybe the markets may rally at one point. I also believe that we do have a shortened week here, Good Friday, coming on Friday, which the markets are closed. That should also bode well for stocks. And what I mean is usually we get this holiday reversal. Don't ask me why or how it's done. Usually just it just happens, and we have been in a pretty nasty downtrend the last week or so. So I'm looking for a little bit of a bounce here this week. Now, obviously, it's just based on my analysis. If anything does happen, any news can trump the charts. Whatever Janet Yellen says, good or bad, can trump the charts. So you got to be aware of that, okay? But off the technical analysis coming off of Monday, I do feel that the markets are due for some sort of a bounce. Remember, as we get far away from the mean, we get that snapback rally. So I'm looking for higher prices. Now, that does not mean first thing Monday morning. So we need to really be patient out there if we're looking for some long plays. But more importantly, in the NASDAQ has actually been down. It's really been the worst hit, and I'll show that to you in the chart. So let's dive right in. The first thing I'm looking at is the dollar. Now, on Friday, I came in the video and I said the dollar is at some really big support. But we do have a head and shoulders pattern in the dollar. Now, obviously, if the dollar starts to break down even more, that would put some buying pressure on the commodities, soft commodities, precious metals, and of course crude oil. And we did see crude start to rally and rally pretty hard now, way above 100. Crude is now trading at 103.51, down 23 cents as I'm filming this. But you have to be aware that watch what the dollar does, because this is going to be very important here. And another thing too, what I've always been saying is the Japanese yen, right? Risk on, risk off type thing. So if we have the yen move higher as we did, we had a risk off environment. Now, we are at resistance here. We do have a Fibonacci cluster right above this upper trend line in this ascending triangle. So that also to me looks like, well, we came pretty far in the last 5-6 days. Maybe we get a little bit of a flag pattern into this support area, and that would help stocks rally at least for a couple of days this week. So I am still looking for further downside, but nothing could just go straight down. And with the indexes kind of extended, I am looking again for some higher price. And also seasonality, we do have higher prices for the week of Good Friday. So that's another possibility why we might bounce here. Okay, so now let's go right into the bonds. Bonds did break out, as you can see from this resistance area, and now above the 200. And again, guys, this is troublesome. So when you see bonds rally, money's coming out of equities and going into these safe haven stocks and currencies. And this is what is a big concern of mine moving forward. I mean, after Good Friday, because when you have bonds rally like this and now took out the 200 and this major resistance, which is going to act as support. So I'm thinking bonds might come in, pull in right into this area here, and then have another leg up. And if that happens, then we should have some more downside pressure in equity. So that's what we need to watch, continually watch the bonds here. Okay, we did meet one of our targets of 1800. We actually 1798, 1800. We came down literally by just under 3 points, and to hit the target here. So this is going to be the first target. The next really big downside target is going to be right around here, 74, 77, somewhere in that area. But that's going to be really the next downside target. It's going to be this area here in the ES, if you're watching the ES contract. Let's take a look at the overlay. Now, as you can see, we had bonds move higher, we had gold move higher, and I think gold's going to challenge, at least the GLD going to challenge these previous swing highs here at that 135-ish area. Now we have spiders moving lower, so everything is lining up for more downside. But again, like I said, everything doesn't have to go down in a straight line. So I do think we're going to have a little bit of some upside movement here. Now, we are coming close to this uptrend channel here from the November 2012 low. So you have to be careful. We're coming into some support here. So if you're short, okay, I would tighten up some stops, trail some stops, or if you're looking to buy something, I wouldn't be looking to buy anything just yet. Let's just see where this market is headed. But again, a break below this, you're going to see that February low, and then, well, you'll see the 200-day first, and then, of course, the February low. And then we'd really have to evaluate it, because now we're actually, instead of a correction, you might be coming back into a bear market here. So still early to tell. Still too early. But I'm looking for maybe a push down early today. Maybe even a sell-off today, and then a rally maybe Tuesday, Wednesday, Thursday, and for the rest of the week. So let's just keep an eye on things. Here is a really big concern of mine. This is the transports. Now, the transports really took it on the chin. I mean, you could see a matter of days, we are now below this uptrend channel from March 2012. This is a major, major channel, and it's been breached. So this is actually, let me just get that right there just to show you. Get this out there. Right there. Okay, you can see we breached it. So this is very concerning to me. We need to get back above this immediately. I mean, like today. Because if we start to break down and we hold this, all that's going to happen is we're going to backtest the upper end, the lower end of this channel, and then start to move forward. And this is our leader. So our leader is in big, big trouble. Now you take a look at the IWMs. Look at the IWMs. This is our secondary leader. It's already at the 200-day moving average. So this is a very troublesome chart here. This is really a technical breakdown. I don't like the way this chart is setting up. Now, and if we start breaking the 200 and all the indices start to break the 200, you're going to see all bets are off to the upside for at least several months when you have fund managers looking at the 200. You know, below the 200, they start liquidating. Above the 200, they buy pullbacks. So this is not a good sign. So, but I will say that this is a good candidate for a bounce. Because we're at the 200. So you notice that some of the indices are near or at some sort of support zone. Now the Qs, again, are in desperate need of a bounce. And if you look at this, we are right at that low. We are just about there. And that would be, to me, would play for some sort of a dead cat bounce, at least back up to flag back up into this area of resistance. Okay, so let's keep an eye on that. Looking for a bounce again. But again, I think it's going to be short-lived. It would just be a bounce play ready to go short, to go start shorting the market. It hasn't been so easy to short, that's for sure, because markets have either gapped open to the downside and just sold off with very little bounces. And that means, you know, in my trading plan is that I'm looking for a bear flag in a downtrend, looking for higher prices on low volume to look to short. But that's really, it hasn't happened. It's been literally just basically a quick sell-off, and the market just continue to go down. So it's been a little bit hard. But again, trade your trading plan. All right, diamond, same thing. We broke the 50, broke the 20. Now the next target's going to be the 200. Now, like I said, if we get a little bit of continued selling this morning, maybe we get a big flush and then we start to rally again. So let's just see. Let's see what happens here. And last is going to be USO. I just want to show you USO here. A bit extended. I'm looking for a pullback into the 36-ish area, and that's when I look to start nibble and get long. Stops will be just below here, okay? All right, guys, let's see what happens. We had a pretty nasty week next week. Let's see if we get this reversal to the upside. Again, Janet Yellen speaking. We do have some Chinese data coming out this week, so that's also going to be a market mover. Pay attention to what's going on, not just in your light of what you're looking at. Pay attention to the surroundings, such as what's the worldwide markets doing, what's commodity prices doing, what's the dollar and the yen, most importantly, and then bonds. Keep an eye on that. That's going to give you some clues for some intraday setups, okay? Have a great day, and we shall speak to you tomorrow. Take care.